All right, let's get it started tonight. Let's do an audio and visual check. How's everybody doing? I'm almost over this cough and my voice is getting better. Good evening, Gary, JWA. You can hear me? Yeah, I'm finally feeling so much better. My voice is still a little bit off. It's a little bit off. It's more clear. I still have cough drop, and it's probably going to last another week. Who knows? Sounds better. Thanks. Yeah, new haircut. I shaved. Trying to feel better. New week, and going from there. Yeah, voice sounds better. Hello. Yep. All right, so let's get started. Give me a moment while I get a few things set up. Just like slow markets, I'm a little bit slow tonight. It's Monday for me, so you have to give me a break. I'm not in charge of reset, guys. I told you I'll always be fighting to get you guys as much as I can, but I can't promise anything. Let me see. Just a couple more moments. Let's see. Okay, let's get started. Welcome, everybody. Welcome to Slow Markets. I'm Coach Dakota, Coach TBA. As always, there's our Top Step risk disclosure in the YouTube chat. We're going to be analyzing and talking about the live markets like we do every night. And you can see behind me, we have the NASDAQ on the daily. How's everybody doing? It's the first day of the trading week. How's everybody been trading? I ended up having a good trading day. I didn't place a trade until like afternoon, and I ended up making a pretty decent amount. Slowest markets, no good. Yeah, GameStop. I seen that. I seen the GME and the GameStop because of Roaring Kitty made one post. It's so funny. Didn't trade this morning. Waited for slow markets. Minus 900. It's a long week, guys. Tomorrow we have inflation data. So that's what I'm going to be waiting for. I'm excited for it. I'm going to be on TopstepTV during fast markets with me and my trading buddy, Rips. We're going to see what the core PPI is, and, of course, the PPI month over month. So we are expecting some volatility early in the morning, about an hour before the markets open, of course. So I'm expecting chop tonight. I'm not expecting any big moves. I'm not expecting a breakout. I'm not expecting a trending market until we get this core PPI and this PPI information. And of course, we have our Papa Powell speaking and a couple FOMC members speaking. So we're going to see a lot of volatility in the morning. And so that means tonight during slow markets, don't expect much. I'm not expecting much. Of course, anything can happen. It will be a slower than normal markets. Dakota, is it possible to share your daily P&L, not just totals like the daily average, etc., so we can get an idea about the volatility? Yeah, I go over it. I think I go over it pretty often. Hang around. Eventually, I'll go through my statistics on my live account. You guys get to see the ups, the downs, the drawdowns, the high watermarks. You get it, and I go through it. I went through it a bunch of times this past month because the traders have been interested in it. So I'm sure if you hang around enough, you will see it. And maybe depending on how class goes tonight, maybe I'll pull it up and we could go through last week, because last week was a technically a drawdown week. Anyway. So here we go. Here is the NASDAQ on the daily, and we're right in the middle. We're right in the middle of this range. The first thing that I noticed is that there's some resistance here, right? There's a lot of chop in this area, and here we are right in the middle. It's very tough trading. It's hard trading. Of course, we have this support down here right around 18,000. 18,000 to 18,100. So this is a nice zone. Obviously, you guys could see where we, sold off support, became support again. And if we zoom in, we had that sell off right here, late last week, and we've pretty much had 3 really bullish days, and we are still above the high of the 7th, and we're kind of just consolidating. Today was just an inside day, a consolidation day. We didn't break above, we didn't break below. We stayed inside of the day, and so we're right in the middle. There's not really much going on in terms of where are we going to be placing a trade? Where's a good risk reward? What bias should we be? I'm still bullish, obviously, because we are trending up and to the right. However, there is this that I was looking at. This might be a little bit harder to draw. And everyone has their own ways of drawing this thing. But we did break out of this. I didn't cover this. I should have covered this Thursday. But this is something I definitely have been watching, where, of course, this is a zone, right? Because you could draw this however you want. But the idea is the same. And I'm sure if we zoom into an hourly chart, it'll be a bit more cleaner. So let's zoom into an hourly. Let's zoom out. Dang, that's actually pretty clean. So I know it's zoomed out pretty far, but look at this. We technically broke out, pulled back, and then we went and tested the high. So I love this strategy. Everybody knows, and who has been watching the way I coach and I trade, they know this is one of my very favorite technical patterns. I didn't trade this, unfortunately. This was a great opportunity. We broke out. And so I think what we're going to be waiting for is the way I'm seeing this. We have news tomorrow, and news kind of invalidates a lot of stuff. But from a technical standpoint, could we be seeing a bullish flag, some type of a pattern here? We're hanging above this trend line. And what I love to trade, where we pull back, we retest, and then we break out. And so to me, a pure breakout isn't valid until we break above this high. And so I think maybe we consolidate if PPI inflation's good tomorrow. When we start to break out, then it's just risk on. And then we can start targeting some of these, higher targets over here on the NASDAQ, like maybe 500 and above. So this is what I'm going to be looking for tomorrow after PPI and after the inflation. I'm going to be on the fast markets with myself and Rips. So it's going to be fun to talk through this, watch through it. This is going to be something I'm going to be watching. We're all going to watch this. Maybe we sell off and maybe we test it again, right? We could very well, test it again. That's another thing that I'm watching. But tonight, to be honest, guys, tonight we're right in the middle. I don't want to be placing a trade. I don't want to be getting in long. I don't want to be getting in short, because we're right in the middle of this inside day, this range. This is a 60-minute chart. Look at all the wicks to the bottom side. There's been a lot of down pressure. So it's hands off for me tonight on the NASDAQ. So let's get to some more questions, and we will go over maybe crude oil, gold, or the Nikkei. Ivan Smith, do you trade trends, ranges, or reversals? It's either trends or ranges, right? I do trade trends or ranges, reversals or continuations. Any technical pattern that has a good risk reward and that I can manage my risk efficiently and effectively, I'll trade it. I'll have to have a whole class over tick charts. Someone's asking about tick charts. Let's take a look at crude oil. Okay, crude oil. Here's the crude oil on a 60-minute chart. Now remember, I'm just looking at the markets for the first time tonight. And so bear with me. A lot of what I'm going to be saying, as always, is just me thinking out loud. Can you say this is the same pattern we were looking at the NASDAQ? Maybe, right? Maybe there's an argument for that same pattern that we were looking at on the NASDAQ. So I'm bullish crude oil. We can see this is a 60-minute chart. We went up. We just about tested $80 a barrel. Sold all the way back down to 79. And look, support, sure enough, became support again. And so I'm looking for crude oil to test $80 a barrel and possibly break out and find some of these higher, $81, $82 a barrel is what I'm looking for crude oil to go. Bullish crude, I do believe that we could break above $80 a barrel again. We're finding buyers. We're finding support. We technically made a higher low. We technically made a higher high, right? It depends on how you want to look at this. But I'm looking at this as a higher low. And we pushed and we made higher highs since back in May 2nd. How do we trade this, right? Because if we're bullish, and I do believe that we could get above $80 a barrel, how would we trade this? How would we go into tonight? I don't want to go through every market tonight and just say the same thing, because honestly, I could say I don't want to trade this because of the news in the morning and the volatility that's going to be coming on in the morning. And so technically, I could go through every single market tonight. Gold, crude oil, Nikkei, NASDAQ, ES, and say, you know what? Find the reason not to trade it because we have the big news tomorrow, and sometimes it's better just to sit on our hands. Yeah, PPI news can change everything. I'm bullish. So it's just simply a matter of how do we get in? How do we buy this market? How do we get in long? And if I was to look for a long, I would wait for a pullback. I would wait for crude oil to maybe run some stops. So maybe there's some traders with stops right around this area. And if crude oil sells off and rallies and run stops, then possibly, whether it's tonight or tomorrow, maybe it's better to just wait till tomorrow. Yeah, and plus we have the roll. You guys that's a good point. It's May. This is, we'll be needing to roll over the monthly contracts for the markets that do expire monthly. Let me take a look at gold. So, gold's in an interesting area. Look at this, because we made this maybe, right? Is this something that we can consider? This is an interesting area on gold. This is something that we can look at from a technical standpoint, right? Where we're making higher highs and we're making higher highs and we're making higher lows. So this very well could be an opportunity to have a decent risk reward. For example, if you want to get in long, say here, stop loss could very well be okay there. And then looking for something like this. I do like this long on gold, to be honest. We do have, look, this was resistance. Is resistance becoming support? Maybe. Something very simple, very basic, right? Resistance is becoming support. We broke out. This is definitely an option. We're actually starting to break out of consolidation as I speak, right? Look at all this consolidation. And this is a 60-minute chart, so you can imagine there's 7-8 hours worth of consolidation right between 23.45 and 23.40, and now we're starting to break to the upside. If we do, maybe we see 23.50, 55, 50. Let's zoom in. Let's look at a 5-minute chart and see what it looks like from there. 5-minute chart, it looks a little bit more messy. If you're bullish, there's definitely an opportunity here somewhere to get in a decent risk reward to the long side. Maybe it's a pullback on this higher time frame. I'm not sure. I'm going to watch and I'm going to let it play out. Like I said, I'm just feeling that way with every single market tonight, with the news tomorrow. And the news could make make any market. I mean, especially this big news coming out here in the U.S. that could make any of these markets just push one way or the other. Let's get to some more questions. Maybe we could talk about the tick chart tonight. Let's do a vote. Let's do a brief vote. Okay, so here's a vote. Should I spend the last 30 minutes of this session talking about tick charts? Or the last period of this? So yes or no, should I talk about tick charts tonight? Do you look at other charts like the VIX or the TLT to make your trades? Danica, no, I do not. I do not look at the VIX or any other really indicator to place my trades. I'm from the US, Alan. What makes you think, besides that support, that GC won't keep dropping, market structure is bearish? So, looking at gold, because this is what the main question is technically over the past 2-3 days it's bearish, but for this entire month since May 1st, right, we're bullish, right? We have a higher low. These are the pivot highs. And we have a higher high. So technically, we can argue that this was resistance. This is now resistance becoming support and possibly another higher low. So from a technical standpoint, you can argue that this could be a decent trade to look for a push up. However, for maybe the more immediate time frame, so if we start to zoom in on a smaller scale, and we can say, well, now we're actually making lower highs and lower lows, right? And so markets are fractal. You could make this argument. You could change time frames. You could look at different perspectives. It depends on how you trade. It depends on the time frame that you're trading, and it depends on how you're looking at the markets. There's always going to be an argument to convince yourself whether either to buy or sell, right? I could convince you to buy this market. I could convince myself to buy, sell this market. There's always ways to convince yourself, because if I zoom into a 5-minute chart, yeah, we've been selling off. It's been going down and to the right. But then maybe if you go to a different time frame, right? Maybe the hourly chart or something, it's like, hey, we're going up and to the right. So it depends on the time frame. That's where consistency becomes one of the most, consistency and risk management becomes one of the most important things for traders. There's so many ways to look at the market. There really is. And there's no right way. The only right way to look at the market is through a risk management perspective and managing your risk. You could use any indicator you want, any type of time frame or analysis that you do. It doesn't really matter. Let's see. Let me get to a couple more questions. And I'm answering questions, so if I don't get to your questions, copy and paste. We have some amazing moderators who are feeding me these questions. So go through them. Which time frame do you have better confirmations, 60 or 5-minute? So for me, it depends on the time of day. During my slow markets class, look how well this 60-minute trade would have been, right? So get in at the breakout. I mean, you could argue where you want to get in at, but this looks like a really good trade. During fast markets, during the New York session, I like the 5-minute chart because the markets are moving a lot faster. So do you find yourself having to adjust your strategy from time to time as the markets evolved, or you just continue to trade price action in the same way you have always done? This is a good question. This is probably one of my favorite questions I've had. Big shout out to you, Joel. I love this question. So I'm going to repeat this again because it's very, very important. Do I find myself needing to adjust my strategy from time to time as the markets evolved? The markets are always changing, right? Or do I just continue trading my very basic price action strategy the way I've always done. So if you followed my trading, at any time this year, I started my live account February 9th. I started trading XFAs the beginning of the year. And there was a period of time when the markets were just really choppy, and I could even pinpoint that, right? We could go back to the NASDAQ and we could go to the daily chart, and I could give you an example. So here is a beautiful example. This is the NASDAQ daily chart. I struggled right here. I really did struggle. Not that whole week. I would say here. This is where I struggled. And you can see the difference between this volatility, right? This is good volatility. We're having really good daily ranges, 200, 250 plus points and every day here on the NASDAQ. And I was trading good, right? And then we transitioned to consolidation, right? We consolidate. It's a lot harder to trade. And the market goes through these types of transitions a lot. I struggled. I had like a $30,000 draw. A $30,000 drawdown during this period of time. And the way that I like to trade is I like to place my trades. I have multiple contracts. I like to hold for a lot longer than what the typical day trader or the trader you see here at Topstep holds, because I'm holding a little bit longer and I like to trail my stops. Well, this type of a market doesn't really allow you to hold for very long, and it doesn't allow for those nice long runners versus a market like this, right? You could get in and you could imagine you could have a lot larger type of a runner when you're trailing it. And then of course my bias where I do have, everybody knows here that I'm more of a perma bull. It's easier for me to buy the market than it is to sell it. I struggled. I struggled during this period of time. So everybody knows I was looking to buy the markets in this zone. I was looking to be buying the dip. I do place sell markets. I short the market sometimes, and I do make money. But it's a lot easier for me because I don't know. It's just me. It's just the way that I am. It's easier for me to buy the market than it is to sell it. So as the market transitions from these different periods where we're selling off, now we're transitioning to a bullish market, now we're in a consolidating market. Yes, my very basic technical analysis does not change. The same thing you see me do tonight, the same thing you'd see me do during the New York session, it will never change. I shouldn't say never, but it has not changed for me. So the technical analysis, like you see this gold, like you see me talk during all these markets, it does not change. But the way I manage the trade does. So for example, during consolidation periods, I will close out trades a little bit quicker. Maybe I will not trail it as much. Maybe I have a tighter stop loss. Maybe I have a wider stop loss. There's little fine details on trade management that I do have to adjust, and sometimes if I don't adjust fast enough, I lose money and I end up in a drawdown. All right, the Hayes records. Here's the question. I seen this one coming. How do you feel about copy trading? I kind of want to have 5 accounts and copy a modest 3 to 4 ES mini points. Trade minimum across the account daily. So everybody who's seen me talk with MP on Friday knows my feelings about copy trading. I'm not against copy trading. I copy traded here at Topstep. We could have 3 XFAs. I traded 3 XFAs, and there's nothing wrong with it. Am I against it in an overall sense? I would say yes, because from my point of view, I want to help traders transition from, learning how to trade, becoming a decent trader, becoming consistent and profitable, and then them starting your own account with your own like your own personal money. And you can't trade a live account doing that. So it's kind of a love-hate relationship, right? It can be good from a mental standpoint, an emotional standpoint, because when you're watching your P&L, it's easier to see a little bit of a P&L mentally and psychologically than it would be to see bigger swings. So I'm trading a live account and my daily loss limit is 9,000. Mentally, it could be very, very hard if you hit a daily loss limit of 9,000 versus maybe you only have one account, or you have a 3,000 daily loss limit. Then it's mentally harder, right? You're seeing bigger P&L swings, and it's harder psychologically. But then when you're trying to transition into a live account, then yeah, you don't get, there's no, like, I've never heard of anything where you copy trade across multiple live accounts. But I did go through Topstep's 3 XFAs maximum, 3 combines to 3 XFAs. Then I went from 3 XFAs to a live account, and it's one live account. And then I'm like, well, this kind of sucks because I'm limited, right? Because we all go through that. Or at least I was going through it, right? Because I was trading 3 XFAs, and now I'm only trading one live account. And I was like, what the heck? I'm kind of now limited because, that makes sense because in my own personal accounts, if I, take my own money and I open up my own brokerage account and in my own personal trading, I can only trade one live account, like one live account. You call your broker up and one, like, just, that's the way it's been set up. You don't go, and I even had a conversation with Peter Tuchman, and I asked him, I was like, hey, what do you think about copy trading? And he kind of didn't know what I was saying, because of course he's much older, right? And he's like, I don't understand what you mean by copy trading. And then I had to like explain to him, like, imagine whenever you place a trade, what if you have an algorithm or a bot just copy it 10 times? He's like, well, why would you need that, right? Why don't you just place a bigger size? And he didn't really understand it because it's a relatively new thing. But the goal for me and myself is to help you guys and help traders transition from learning how to trade to making money to starting your own account. And that's the way you do it. And when I transitioned from 3 XFAs to one live account, then I was restricted. I really was. I had a conversation with Mick and the risk management team, and I said, I want to trade my live account just like 3 XFAs, and I want to be able to scale my live account. And the only way that I'm going to be able to do that and show traders that you could still do it, but you could do it with one account and in a live account, is by showing. And I traded one live account, and I increased my daily loss limit to 3,000 to 6,000. And that's just like I'm trading two accounts, right? And then from 6,000 to 9,000, and that's just like I'm trading 3 accounts. So I hope that makes sense. So I don't have anything against copy trading per se, outside of when you start to become professional and you start to do it on your own, which is what I imagine our goals are. Trading one account is the best way to go. So I hope that makes sense. That's just the reality, right? That is the reality that we live in. Because plus, it wouldn't make sense. At least not to me, is if we took, what do we say? If we want to copy trade 20 accounts, we take $20 million or whatever. We say we take $2 million of our own personal money, and we go to our brokerage account, say Interactive Brokers, and we say, here's $2 million. I want to open up 20 accounts, and then I want to copy trade those 20 accounts. And they'll look at you like you're freaking crazy. Now don't get me wrong. I have my degree in finance, and I do understand that there are retirement accounts, and that's kind of, there is a deep rabbit hole that we could go down about copying accounts and follower accounts and all this and that. But in reality, we're day traders. We're here at Topstep, and the goal is to get funded, make money, and then get a payout, right? And then hopefully do your own thing. Duncan's, my argument doesn't make sense, dude. Explain. Copy trading is very important in this aspect. And I feel like it's a very important thing to talk about. Yeah. Correct me if I'm wrong, guys. Maybe you guys know Richard Harris. Don't you start. Don't you start on that. Copy trading does not spread your risk. It does not. So, let me. You know what? I'm going down this rabbit hole for a minute. We're doing this. Yeah, we're gonna. I'm just gonna show you. This is the reality, guys. We're not messing around. I'm not messing around. Yeah, if you're at a prop firm, it's a great tool, 100%. It can be a great tool. It's a double-sided sword, though, right? It's a double-sided sword where let's go here. If you make $100 in one account and you're copy trading, you could also lose that, right? So let me go here. It's both, right? It's a double-edged sword. All you're doing is it's just like trading a bigger account, trading bigger. It's the same thing. You're not spreading risk. You're not doing anything other, right? It's just like increasing your daily loss limit to $9,000, or you are. It's the same thing. It's not a big deal, guys. But you know my opinion. So anyway, that being said, like I said, this is not a joke. Not playing around. It's always going to be, and I'm going to be always 100% transparent and serious with you guys, because this is about learning. This is about becoming profitable. We're all, hopefully everybody here is learning together, and I'm here to answer questions and to hopefully help you guys out. So this is my live account. Everyone can see it. Everyone sees it, right? 100% my live account. We're not playing around. Like this is not a joke. This isn't a copy trade. We're playing with fake money, simulated account, and if you make money, you get a payout, right? This is not a joke. This is not playing around. Here is a DOM. This is a depth of market. This is where real orders go through the order books. This is the NKD. This is the Nikkei. We could all see the order book is very thin. Look how thin this order book is. This is not playing around, right? So this is my live account. You can see with here at the Ninja Trader Brokerage. And this is the DOM depth of market on my live account. So you can see here on the order book, feel free. I don't mind. You could pull up your own order book and you could see this as well. So we could pick a number. So let's do 38,370. And if we click on this, there is a 30 order, right? There's 30 contracts added to that price. So now there is now 33. This is not a joke. So I just wanted to show you guys there because we're not playing around. It's real money. It's a live account. It's not simulated. And so that is the point that we're trying to get to. That's the point that I'm trying to get to, that we can trade a combined account, which is a simulated environment. Then we could transition to an XFA, which is also a simulated environment. However, the money that you make on there, you can get a payout. And then the ultimate goal is to become a live funded trader, have a live account. And that's what this is. And it takes time to build up to it. Once you get there, then you are a legitimate live trader. So hopefully that makes sense. Yeah, Danny L, I see it on Bookmap. So there it is. And it's no joke, guys. And you see I don't want to get into a rant, but you see everywhere else that copy trading, multiple XFAs, PA accounts, this and this and this and that. Simulated or not, it's great that you can get a payout, but this is the live markets. This is real markets. And this is what my goal is to help you guys become a consistent, profitable trader, and then eventually transition into the live markets and a live account. So Okay, that being said, I need a drink. You guys are getting me into rants, guys. What's going on? MP is rubbing off on me. I spent a little bit of time with MP on Friday mornings, and it's rubbing off on me. Yeah, Janish. My only question is, does the money spend the same? Money spends the same. Tick charts. Yeah, we could jump into tick charts. Let me talk about Nikkei real fast. Here's the Nikkei. This is the Japanese market. I seen everybody in the chat was saying like this was quite the move. Look at this. Look how similar this was, right? These are pretty close to being identical. I was looking for a short here on the Nikkei, but I was kind of seeing if we could get up to here. I was looking for Nikkei to rally up and see maybe 38 high 600s and then take a short. I did miss this and spilt milk, right? I was wanting a short. I was looking for a short. It didn't give it to me. I was waiting to see if we test this, maybe looking for something like this, right? We got that, but we didn't get it to the level that I wanted. There was no clear reason for me to short right here. Sure, with hindsight, right? Maybe there's resistance here, here, and here. And I mean, it was looking like we could break out. And I would much rather get in at a price, but it's one of those where it's spilt milk, right? So let's go camp. Richard Harris, are you talking about the ES? Anyway, I think I covered everything. That's it. Maybe we can start talking about tick charts now. There's not really much going on, guys. It's really is a slow market. It's slow markets. We have big news tomorrow. I'm going to be on fast markets with Rips on TopstepTV in the morning. And let's start talking about tick charts. Okay. This is what you guys are looking. This isn't a signals class. I had a good talking to. I talked to MP. If you guys remember when Andre was on and we had the house account and we were talking about getting in a trade and we were looking at long NKD. So we were looking to buy Nikkei all together. Well, it wasn't all together. The tilt was like 98%. That was something else. And it's like, man, I don't want this to just turn into signals. We talk about the markets. We'll read the markets. We'll talk about technical analysis. Ultimately, it's just how do I teach traders to become a better trader, become better risk managers? Because if we just got rid of slow markets, would you guys still be just as good as a trader, rather you just listening to me every night? So let's talk about tick charts. We have 20 minutes. Here we go. So 20 minutes going into tonight. I'm going to send I'm thinking about sending a message to Jack or someone to cut this video and start this video over again from minute 20. I want to talk about tick charts, but then I want to make sure it's saved for everybody. Rips, if we could convince MP to do 50 contracts, let's do it. I would rather play with MP's money than my own, 100%. Maybe he'd probably do 50 on ES. I don't think he'll do 50 on NASDAQ. Danielle, do you think we could get MP to do 50 contracts on the NASDAQ? He's good. Okay, Danielle, you got me. Okay, if I do a note, I'm going to start doing tick charts at 8:40 p.m. This is going to be a great class. So let's talk about tick charts. everybody loves them. Everybody's interested in them. I think this is going to be a great class to talk about tick charts. So what is tick charts? How does Dakota, or how do I trade tick charts? So let's first talk about the way that I like to trade on the NASDAQ. Most of my setups on the NASDAQ are based on a 5-minute chart. So let's take a look at a theoretical trade, a hindsight trade, and we will transition to a tick chart and how I view it on a tick chart versus a 5-minute chart. So this is a 5-minute chart here on the NASDAQ. We had this big sell-off, and we had this sell-off, let's just say down to this zone. And I didn't take this trade. This is just hindsight trading, and this is only an example. And when we got to this theoretical zone, right around 18,250s, let's just say we were looking to buy the market. Okay, we were looking to buy the market around 18,250s to 260s. The market started to sell off, and it's very hard to see what happened on these wicks and in this zone on a 5-minute chart, right? So I highlighted this zone. This is a decent zone here on the 5-minute chart. So what I like to do is I like to watch a 100 tick chart. And so what a 100 tick chart is, means for every 100 transactions, it prints a candlestick. So let's transition. Here is now a 100 tick chart. And now if we scroll all the way to the left and we go find that zone, there we go. So that zone on the 5-minute chart became this on the 100 tick chart. You can see that was just this right here was like one big wick on the 5-minute chart. This was another wick on a 5-minute chart, right? And so there was a lot that happened between this period of time. And I wish I could pull up, maybe I'll pull up another chart in a minute. So you can remember what that 5-minute chart looked like right at this bottom point between the 250s. So while I was looking at it, I'm going to go ahead and switch workplaces. So let me do this. I'm going to switch workplaces. Let me make sure it looks good for you guys. And I will do a side-by-side comparison so that way it looks nice and clean. So let's do it. I'm going to do a side-by-side comparison because I think that's only fair. So give me a moment. I'm going to adjust my charts so that it looks clean to you guys. Okay. 100 tick chart will go at 750 for me. So here we go. This is the exact same time. So this is exactly how I look at my charts. We'll put it in the same moment in time, right? We can see this is a 5-minute chart. That is technically a 3-bar reversal. We have a nice sell-off, and then we have a 3-bar reversal. That same 5 minutes, so we say it started at 750, is basically this right here. Okay, so this one bar, this one candlestick right here is this on a 5-minute chart. So does that make sense, guys? Stop me if I'm going too fast. Ask questions. Feel free to ask questions. There's no question that's too dumb. Everybody's on different levels, right? Some people's traded this for years. Some people, this is the first time learning about it. So over here on the left-hand side, in 5 minutes, we have one candlestick. In this same 5 minutes, we have pretty much from here all the way to here. Let me do maybe horizontal or vertical lines, and that will maybe F7. Okay, so from, holy cow, from there to right there. So, okay, there we go. And so you could imagine during this 5-minute bar, this one right here, all this price action occurred, right? So that's a lot of information, and it happens really fast, and it's very hard to see. And so if you're looking to buy, and so as the market came down to this zone that we were looking at, we were saying what, 250s to 260s. And if we mark 250s to 260s in this area, and so we're looking to buy the market somewhere around here. And so what we do, or what I do as a trader, I look for some technical reversal pattern, whether it's a double bottom, a higher high, a break of lows, a rounding bottom. You know, that's what I'm kind of looking for, right? Somewhere around this zone. And so over here on the 5-minute chart, you can see what a 3-bar reversal is. We have a downtrend, and a 3-bar reversal technically happened when the previous bar's high on a downtrend broke, right? So this was the 3-bar reversal right there at, like, say 275. So a 3-bar reversal happened pretty much up here, right? So the 3-bar reversal that I marked happened all the way up here. So all the way at 275, right there, 275, right? However, on the tick chart, we're able to see the pattern in the technical analysis a little bit quicker, right? So there's probabilities, there's odds. So the way I look at this is the same way I look at technical analysis on the higher time frames. Same thing you see me do on the hourly chart, right? We're making lower highs, higher lows, right? We're starting to see some type of pattern, and now we're starting to see equal highs. Well, from here, we can choose, do we want to play a breakout of this? Do we want to play a breakout of maybe this resistance, right? Now we're getting in at, instead of 75, we're getting in at 268. Maybe we're getting in at 265. So we're getting in at a lot better price. And so we could see the price happen move a little bit better and a little bit quicker. And this is where we talk about probabilities and statistics, or probabilities and risk reward. So now getting in earlier, so getting in, down here, we're getting a better risk reward, right? Our risk reward getting in at, let's say, if we got in at 65, we're getting in down here, right? So we're getting in down here rather than up here. Does that make sense? Now, if this is our stop loss, we have a much better risk reward. Let's just say this is our take profit. Say 18,300 is our take profit. So our risk reward went from, if we waited for a 3-bar reversal, went from a 1-to-1 to a 2-to-1. So we, instead of having a 1-to-1 risk reward, we now have a 2-to-1 risk reward, because we're looking at some technical analysis on a smaller time frame. Now, I don't really recommend this too much because it's really fast. It happens really fast, and it's not really for beginners, right? So it's very hard to say and recommend this for beginners, but now that we're on it, now that we're talking about it, there's the example, okay? So now there is the fact of probabilities, right? We're getting in here is a lot less probable, means I will win this trade a lot less than actually waiting for a higher time frame confirmation like a 3-bar reversal on the 5-minute. So this trade is more probable, meaning that it will work out more often rather than getting in down here. This trade will work out less often. So it's about risk reward, it's about probabilities, and that's how I use the tick charts. And now let's say, now we're going to do another theoretical. Let's say I get in at 65. So let's just say we bought the market on a breakout at 65. And my stop loss is here, okay? So I got in the NASDAQ at 18,265, and my stop loss is at 18,251. The next thing I like to do is to trail it. Now, everybody who's seen me trade knows that I like to trade and I like to trail the market. So there's this other wick. Look, here's the wick on the 5-minute chart. Here's that wick on a tick chart. So I would trail it based off a 100 tick chart. And that's what I'll do. I will look for some very basic technical analysis, and then I'll move my stop loss below pivots, right? Like here's some support, and I'll continue to do that on a 100 tick chart. I might have got stopped out on this one, I mean, depending on if I would have moved it there, yeah, most likely I would have been stopped out on this one. So this is just an example of the way that I like to use a 100 tick chart. Any questions on this while I have it up and while I'm talking about it? This is how I'm going to be trading tomorrow during fast markets. This is how I trade during the New York session. And yeah, that's pretty much it. Dakota, do you take two-legged pullbacks? If you see one at the top or the bottom, they are great entries. I'm not sure exactly what you mean by two-legged pullbacks. The 100 tick chart prints bars way fast, very, very fast. It'd give Hogue a heart attack. It's not for beginners. Is 500 tick better for yes? I couldn't tell you, Crude dude. I can't really say if one is better than the other. If you have a strategy, or if you're able to build a strategy or a system, or if it helps you in the way that you trade, then yeah, it could be better. What time will we be on fast markets? The start of fast markets starts at market open, so it starts at 8:30 Central Standard Time. Yeah, I use the 100 tick chart mainly for the NASDAQ. I'm a NASDAQ trader during the New York session. I mainly trade the NASDAQ. Every once in a while, I'll trade the crude oil or gold. My slow markets class that you guys see me do here every single night, markets are obviously a lot slower, and you see me trade. This is exactly how I trade during slow markets. You see me trade here Monday through Thursday, right? Monday night through Thursday night. Now I'm feeling better, guys. Now I am definitely feeling better. And so we're going to be talking about having every once in a while, maybe a London session, and maybe every once in a while have a little bit of an extended session, just depending on what things are going for. Dakota, do you wait for the 5-minute candle to close in your direction before looking for a tick chart entry? No, I don't wait for candlesticks to close, and that's just my personal preference. Why do I only focus on the NASDAQ? I love the volatility on the NASDAQ, and I tend to get really good risk reward on the NASDAQ. $5 only applies to TopstepTV daytime. I was just coughing. Yeah, you can hear me now. Danielle, that only applies for daytime. It's only daytime for the $5 mute. Well, then I'm using an excuse. I'm sick. I'm sick. I was coughing. I didn't want to hear you guys. You guys didn't need to hear me cough. Anyway. You guys could hear me. You could hear me just fine. Venmo all of you guys $5. Yeah, I'm feeling better, but if it's an excuse, I'm going to use this sickness to my excuse all I want, as much as I can. I've been miserable. I feel like I've lost like 2 weeks worth of my life to this dang sickness. But anyway, somebody was talking about let me see. Someone wanted to see my live stats. Let's see. I go over this so much. My live account. Okay. Coach Dakota's live account. This is what you guys are obsessed over. Here's my live account. Here was my ugly day Friday. It was actually a 2-day losing streak. Look, there's my 2-day. Thursday, I was up 2,000. I ended up finishing down $1,200. Friday, I never was positive. It was just negative, 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 negative. During fast markets, I talked to Mick. I was like, hey, Mick, open me up for an extra 3,000 so I could continue to trade. You guys seen it there. I took another loss. And then here was today, 7,600. I mean, it's not showing off. I don't want to show this to you guys. I mean, no one likes showing you guys this kind of a day. Yeah, I called a great short, but I was lost, right? Yeah. Yeah, I wish this was a flex. This is not a flex. This is my real statistics. Minus 12,000 on Friday. Dakota, do you trade on the Asian market opens, or do you usually wait for a period of time to take the trade? I ask because Slow Markets Live does not start until 8 p.m. Yeah, very much. I do trade both. It depends on when the trade setups, right? Sometimes you will see me join Slow Markets and I have a trade already on because I placed the trade before class. And then sometimes it depends when the trade setups. To be honest, it doesn't really matter too much. Here, you could see this was 30 minutes before it opened, and this has been during class. So, oh man, that might have been a decent trade, to be honest. That could have been a decent long at 38,200, and I missed it. But it doesn't really matter the time, to be honest. And a lot of my analysis I do on this higher time frame, like a 60-minute chart. And so it doesn't matter too much for me exactly whether I'm sitting down at my computer as the market opens or, a little bit after. I prefer Rick to Riches. I prefer a 100-tick chart, and it's 100% my personal preference. And the only reason why I like the 100-tick chart is because during the New York session on the NASDAQ can move like this in like 1 minute. And on one candlestick, there's so much data that could be packed into 1 minute or 5 minutes on the NASDAQ. And it's 100% my personal preference. Alan S., my risk reward could vary between 1-to-1 to 1-to-10. And if 1-to-10 sounds very dramatic, but it's true. There's times where I've had trades set up during my slow markets class where I can get a 1-in-10 risk reward with a one or two contracts runner. But I would say on average, a 3-to-1, 2-to-1 is what I like to get on my risk reward. There's not much of a difference, Navin. So someone asks, is there a difference between a tick chart and having a reduced time frame? There's not too much of a difference, but when there's high volatility, like a lot of orders going through, I would say the main difference between a lower time frame and a tick is one's keeping track of time and the other one is keeping track of the orders, right? And thanks for the reminder, Scorpion. This Wednesday, Coach Robert is going to be joining me for Slow Markets, and we're going to be talking about OCO orders. So if you guys have to be here on any day this week, I would definitely choose Wednesdays because Wednesdays is when I am planning to bring guests on to Slow Markets, and Coach Robert is going to be here this Wednesday. We'll be talking about OCO orders and answering some questions revolving that around Topstep X. Coach Robert is the wizard of Topstep X, and we could be talking about all those details from there. Yep. I think that's it, guys. Yeah, nothing much is happening. We had maybe some opportunity on Nikkei that I missed, and everything else is going to be true slow markets until tomorrow. So if you guys are there tomorrow, I will look forward to you. Me and Rips, we're going to be taking over the fast markets early in the morning. And yeah, it's going to be fun. Alan, live account is definitely harder than Express. Mentally, 100%. It's most 99%. It's a mental thing, psychologically. So, all right, guys, I will see you in the morning. Hopefully, I continue to feel better. My voice is starting to get better slowly and slowly. From that, other than that, take care, everybody, and I will see you then.